Welcome, YouTube family, and welcome to another show of the Kevin Strong Show. And in this video, we're going to talk about taxes and equity. The IRS earlier this year is scheduled to hire 87,000 new agents. Part of this ramp up is for auditing, supposedly for people who are making over $400,000. That's bullshit. And it's also to provide better customer service experience when you do call in the IRS so they can get that last drop of blood before you pass out. So if you're new to the show, welcome. Let's start off by smashing that like button, hit the bell notification when I do release my videos, which is typically once a week on Saturday. I got some information. I wanted to share this with you guys because a lot of this was in the news and then went out of the news and people are forgetting about this. I think a lot of people are under the impression that these new tax agents, so to speak, are just going after the rich. So we're going to share a YouTube video that really is going to give you a lot of practical insight about that's not the case and is going to go after the most vulnerable. Once again, some of you guys keep drinking the Kool-Aid, keep leaning to the left, keep leaning to the right. You need to push all that crap aside and everything will be all right. I keep pounding that drum, trying to send that message to you guys that your problems are local and your solutions are local. The person who sits behind the Resolute desk at 1600 Pennsylvania Avenue, whether he or she leans to the left or to the right, is not going to solve your problems. We're in a moral decay in this country. Taxation is a form of inflation, and inflation is not going anywhere anytime soon. So with the added addition of these new agents, stricter rules by the IRS going after people at the same time inflation is squeezing people, what are you going to do when they come for you? So without further ado, let's go ahead and tee up this YouTube video, and I'm going to give you my editorial opinion. Once again, this is obviously not tax advice. This is just for educational purposes only. But once again, the biggest threat to your income is taxes, because that's when Uncle Sam gets his hand in your proverbial pocket. If you're self-employed or you have a side hustle and you have ways to offset some of your expenses, you can mitigate some of that taxation. But if you are a W-2 employee, bend over and kiss it. So let's go ahead and jump into this. This is going to be really, really good information here. Let me go ahead and switch my screen. And let's go.
You who live here in the United States are going to want to know the latest news announced by the Internal Revenue Service. You may remember that a couple of years ago, thanks to the Inflation Reduction Act passed by the Biden administration, the Internal Revenue Service received billions in new funding to hire 87,000 new agents and to acquire new technologies. The Inflation Reduction Act added $80 billion in funding to the agency, and reportedly, the IRS is now using AI to assist with identifying those taxpayers who are evading taxes and who need to be audited. Well, in its latest announcement, the Internal Revenue Service shared its plans to hire 3,700 auditors who are earning about $125,000 per year.
Okay, so let's take a pause for the calls. You've seen it right there. They're hiring 87,000. A small portion of that is basically supposed to be allocated to just go after people who are basically not paying their fair share. So this is an easy sell to the masses because most people obviously are under the proclamation income of $400,000. That was what the Biden administration has promised, that, hey, we're going to really, really go after those people who make over $400,000 a year. Those folks who make under $400,000 a year, don't worry, because we want the rich, the so-called rich, to pay their fair share. Before I jump back onto this YouTube article, you're going to find out that that's not what they're going after. They're going after small business, and they're going after people who make under $200,000 a year. And all of you have seen the recent agreement between the UPS union and UPS management. So UPS driver with benefits and all the other stuff is probably making around $140,000, $150,000 a year. I just seen a recent article that the average driver from Walmart, the 16-wheeler drivers, are probably making around $110,000 a year. So everybody's starting to understand that $100,000 a year ain't what it used to be 10 or 15 years ago. Today, $100,000 is probably more around 50 or 75,000 because of the rising cost of goods and services. So as inflation continues to squeeze the average American, the federal government has set up in its infinite wisdom to say, we're going to go after people who are most vulnerable, because guess what? If you make under $400,000 a year, if you make under $200,000 a year, you're less likely to push back. Moreover, you're less likely to be in a position to have a professional tax lawyer or a professional CPA that can push back on the IRS in the event of an audit. So at the end of the day, these folks, these being basically the federal government branches of it, specifically the IRS, are going after the most vulnerable. And it's really, 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 really sad. Let's see here. And
I have to note that this is not in line with the research and opinion of a nonpartisan joint committee on taxation.
I just want to pause it. I don't mean to be a nuisance. This is a joint committee on taxation. So this isn't slided to the left or the right. This is a joint committee.
The group claims that the new plan will actually ramp up targeting of small business owners. They estimated that up to 80% of the additional $200 billion that the IRS plans to collect as the result of these additional audits, so up to 80% of this new revenue for the IRS will come from small businesses that make less than $200,000
There you go.
every single year. So small mom and pop shops, get ready for those IRS audit notices in your mail, or even someone showing up at your doorstep. According to Joint Committee on Taxation, just 4 to 9% of the revenue collected by the IRS would come from businesses making more than $500,000 a year. They point to the obvious fact that the legislation is in sharp contrast to claims that Biden wouldn't raise taxes on anyone making less than $400,000. The executive vice president at National Taxpayer Union Foundation, Joe Hinchman, said the IRS will have to target small and medium businesses because they won't fight back. We've seen this play out before. The IRS says we're going after the rich, but when you're trying to raise that much money, the rich can only get you so far.
There you go. So you can't make this stuff up. This is what I'm talking about. Some of you guys get so triggered based on your political affiliation. People who are making $400,000 or $500,000 and above know how to exploit legally all the tax loops that are in the IRS tax codes. Those of you who are W-2 employees or under, who fall under the cap of basically being middle class Americans, you are the most vulnerable. And that's who they're going after. That is who they're going after. Just like that Joint Committee on Taxation said, wait a minute, all of this extra revenue that you're supposed to collect by hiring these IRS agents to go after these people who haven't been paying their fair share, that's only going to accumulate to anywhere between 4 to 10% of the taxation that you're trying to collect. So let's take the high end and say that's 10%. Where's the other 90% coming from? It's coming from middle America. It's coming from your W-2 employee. Taxation is a form of inflation. You cannot make this up. This is happening globally. Some of you know that I'm in the process of contemplating several years down the line of possibly moving overseas. A lot of things are changing. I'm not going to go down that rabbit hole, but one safe haven is now all of a sudden, now they're taxing on worldwide income. So you just can't make this up. They are just squeezing people domestically and internationally. It's just a really, really hot mess. So that's going to wrap it up for this edition of the Kevin Strong Show. I hope you found this video very insightful. I hope it sparks conversation and to get you thinking about how to reduce your taxes. And the most optimum way to do that is to either create a business or start a side hustle so you have some expenses to offset your income. But if you're a traditional W-2 worker, it is not looking good for the majority of us in America. I'm going to end this video with my famous slogan, keep your credit score up and your debt down. This was the Kevin Strong Show button. Hit the bell notification, and I'll see you in my next video.